Good morning, everybody out there. Where I am, it's super cold, and I hope it's not the same for you, unless winter is the season for you. And again, Webinar Wednesday, many times now. And I have to say, I always truly excited about this specific one we're having this morning. And but before I do talk about and bring on our guest speaker this morning, I just want to encourage you guys to tell us where you're from. Let us know what your expectations are. And also, please, if you have any questions, pop them into the chat box. If we can't get back to you, because of course, sometimes the volume just goes at high speed, then we will address your questions after the event this morning. And this morning's event is all powered by Experian. And of course, the How to Be Financially Fit campaign has really been an integral part of the strategy behind the financial side for business owners and entrepreneurs who run and own small businesses. And of course, this morning we're going to talk about factors affecting your credit score and how they can stay on, and how you can stay on top of this, of course, to be able to have a great credit score, which is incredibly important for your own business and your own personal lives out there. So guys, let's get it going. Tell us where you're from, and just a couple of house rules. If for whatever reason we lose you, you lose us, we'll be back very quickly. So don't leave us. And then, of course, what we will do, we will have a Q&A format this morning. And then at the end of the Q&A discussion, we will, of course, close off with a really interesting, very short video. So please don't leave us. Reneshi, thank you for joining us from Pretoria. And it's always nice to see the same people and new people coming back onto the platform. And it's because of you people out there, wonderful people, that we can do what we do, help small businesses stay in business and help them grow bigger and more successful businesses. Welcome, Bevan. Good to talk to you. Good to see you. And I hope you enjoy your morning. And again, so I think without wasting any time, I'd like to ask Paul Nel to join me on stage. And Paul is the acting head of innovation for Experian. I've had the incredible opportunity, truly grateful to have engaged with Paul over many months now. And I can tell you from my side, he's taught me an immense amount. The Experian as a company have been an incredible contributor to the small business playing field of our country. And it's because of organizations like Experian, we can also do what we do. And that's, of course, give SMEs that extra edge to grow bigger and more successful businesses so that can they employ others. And like Paul alluded earlier to me offline, and he said, and we all agree, that small business is the mainstay of our economy, it's the engine of our society, and it's the future of alleviating unemployment and driving job creation. And that's the intent of Experian, and for people like Paul who can help us to achieve that. Paul, without talking too much longer, a great welcome to you. Thank you again for joining us. We're truly grateful and appreciate your presence once again.
Thanks, Mike. A very good morning to you, and a very good morning to everyone who is on the webinar this morning. It's a privilege to be able to engage with all of you once again. So looking forward to our little discussion this morning.
Yeah, Paul, I mean, we've been running this for the Financially Fit campaign for a number of, for many months now. And, you know, the feedback that we get, the people's lives that we have changed personally and in their businesses is well recognized and, of course, well received. So we know that collectively we've made a big difference to many people out there. And you've always done that in any event, and you will continue to do that. And what's nice about talking to you, Paul, and to have an Experian on as one of our key partners is that you have no other agenda, and that's to help others. And that's often extremely refreshing and not often seen. So I'm truly excited about this morning. But Paul, coming back to the Financially Fit campaign, we'll talk this morning about what many don't know, and that's affecting your credit score, factors affecting your credit score, and how you can stay on top of this. And, you know, and you and I mean, you've taught me this, is that over many months, that Mike, you and I are both completely in charge of our credit scores. And that's so
Correct.
important. And I know you're going to talk about this, so I'm not going to expand on that. But Paul, I've got a couple of questions, and from the floor, I've also asked. There's from the DRC, Henry. Welcome, and thank you for taking your time out to join us this morning. And the questions come from our floor, our panel out there, business owners, and of course the contribution from you guys as a team. Now, Paul, can you remind us, and I'm referring to a document here because it's spontaneous, it's hot off the press, so I haven't had time to memorize it, and that's not the way we do it. We try and keep these sessions interactive and engaging and lighthearted. So, Paul, can you remind us why being financially fit is so important?
Yeah, thanks, Mike. And just before I answer that question, just from my side and from the Experian side, it's a privilege to be working with the NSBC and your members to help everyone know that their credit health and their financial health is so important, just like your physical and your mental health is as well. So it's all brought together through that. And I'm personally very excited about this campaign. I'm personally very excited about helping people and businesses in the world, and as is Experian. So, thanks once again for the opportunity to engage and to discuss this. So to go back to understand about why financially fit is so important and why credit wellness is, it's because at the end of the day, from a small business perspective, one of the challenges that all organizations face is getting access to finance. And by being credit well, you're able to gain access to credit from credit providers. So that provides a good opportunity. It also positions you as an organization to be well placed to be able to supply to corporates and other like-minded organizations. But also, you're also able then to get better deals from suppliers, because if your credit wellness and your credit strength is strong, you're in a position to be able to negotiate better access to finance. And then also to secure additional funding. That's something that we all need, and your credit health and your credit wellness is complementary to that. So your ability as a business to access those funds enables, number one, survival in some cases, unfortunately, in today's world. It also gives you the ability to then grow and expand on the back end of that, and also to build new markets, create new opportunities, etc. So what's important to also understand is that the credit wellness of your organization is the business owner's responsibility. It doesn't rest with other people or other parties and all those sort of good things. So that's why it's so important to understand your credit wellness, because you, as a business owner, or your partners, have the ability to get better and healthier. But also at the same time, when you are educated in this component around understanding how well your credit record is, it also helps with your own supply chains, understanding your customers and being able to help them at the same time. So it's a journey of working both ways. So to create that opportunity to have a look at that is important. And why is it important? Because you can become much stronger as an organization and survive. But a core component, and we'll explain this in the next few minutes, is regular checking on that and understanding it. I think that's key.
Yeah, Paul, thanks for that. And today we're going to be discussing credit scores and how can stay on top of this. Paul, can you explain what a credit score is and how does it impact your financial health?
Yeah, so that's a good question, and it's not the easy answer, but I'm going to split this into two parts. The first part is your personal credit score, and then the second part will be your business credit score. So let's touch on that. So from a personal perspective, let's start there. A credit score really is a reflection of you as an individual, of the likelihood that you can repay money that you borrow. Okay, so all the credit providers, be it banks or other lenders and things like that, use credit scores to make a risk recommendation. So a credit score effectively is a reflection of your past financial performance in the credit side of it. And we pull that together from the credit bureaus and start understanding how you are likely to pay back your credit facility. So when you have a credit score, you can have a high score and a low score. So obviously the higher score gives you a better position for acceptance by a credit provider for credit, but it also, the higher your score, so you have a better ability in a personal capacity to get a better deal on credit. So an improved length of a loan or a better interest rate, which we will touch on just now, why those are also important. Mm-hmm. So That's what the factors that build a credit score. We'll expand on that a little bit later, the intimate details of it. The part is that there's two types of personal credit scores. There's the general bureau credit score and then a very custom credit score. So if you go on to up.experian.co.za, which I'll talk to you about now, you'll be able to register and see what your credit score is. And those are the core scores that are generated by all the credit bureaus in South Africa, calculating a whole bunch of consolidated data to calculate a score. And that gives you a very, very good indication of where you stand, and is categorized into poor, below average, average, good, and great. The custom credit scores are what we as bureaus also build for particular credit providers that takes additional information and customizes your credit score. So that could be a bank's own data around you as well, which can complement it. So you have the general bureau score, which is an indication of your creditworthiness, and then you have your specific score, which our clients have a look at as well. Then you also get the business credit score. So the business credit score is then looking at the reputation of your business around its creditworthiness. So does your business have the ability to pay back money that it's borrowing? And that is built around a number of things. So that could have a look at who you are as a business owner, what payment information have you had historically, what does your debtor book look like, are there any judgments against you, what are the trade references, principal information, etc. And so the business credit score is built completely independently of a personal credit score. However, it's also important to note that if you are a director or a principal of a company, then your personal credit score can influence your business rating as well. And we'll expand on that a little bit later, I'm sure.
Okay. Now, Paul, you've mentioned your personal credit score. Do businesses also have credit scores? I know you've just touched on this briefly.
Yeah.
This question is coming through. Do businesses also have credit scores, and how does those work? But there's probably a bit of repetition. You can touch on it very briefly, Paul.
Yeah, sorry, I probably answered that already without going into that. But I mean, the simple reality is that your personal credit score is based on, like I said, personal performance. A business credit score becomes a little bit more complicated in terms of the data that is needed and collated. Mm-hmm. And that is a very, very important score to manage as a business owner for all of you on the call, in order to understand how banks and credit providers will perceive your business. And like I said, there are factors that relate to that. So it's your ability to be able to provide services. If you've borrowed before, how are you paying back those loans that you've got? If you have a debtor book, how are you managing that debtor book, which is also critically important. And these are all data components which are calculated to give a representative of what a score looks like for your business.
Okay. Now, Paul, I've got a question. I've got a lot of questions coming through over the last few weeks, and I got again this morning, and maybe you can assist with it. And I think it's going to help the panel. I'm a young person. I've just come out of university. I don't have any accounts. I don't have a credit card. Do I have a credit score? And if not, where do I start? I think it's a great question.
It is a great question. Not everyone has a credit score. So you actually have to start a credit journey to get a credit score, if I could put it that way. So it's one of these funny ones that you just have to have a look at that. And that's normally going down a path of being able to apply for credit and getting access to that. In South Africa, the largest number of initial credit transactions are rated into the retail environment, the retail stores. So, you get a store card or something like that to go buy fashion or things like that. And because what retailers do is they want to get access to that market to start off with. That's where a significant amount of South African consumers trigger that as their first initial component. But like I mentioned to you earlier, your historical credit score influences score, but also at the same time, there are other core data components that have a significant element to it. So an application gets you onto the credit bureau. You can have a look at that way. It's your data that you've got. You submit personal information with regards to what do you earn, what do you spend, and that starts the application journey with the credit provider. And then you can get access to that. And normally what happens is they will give you access to credit if you have a good financial position, based on the information that you get, which must be honest, by the way. And then what you have a look at that is then be able to get access to a smaller amount of money over a longer period of time with a higher interest rate because you're perceived to be risky, in inverted commas. And then if you pay back that debt on time with due dates, with what's agreed in your legal agreement with the credit provider, so your score starts to improve over time. And I think that's a very important message that I just want to highlight here, is that a credit score is a journey. This is not something that you can get like from no score to average to great in a space of one monthly payment. It's an indication of what you have done historically and how you've behaved and how you will behave. So that's an important element. So to get access to credit for the first time, make sure you have all your information, your data on hand, ready to be interrogated, to ask questions about, but most of all, honest at the same time. I think that's a very core component around that. And then also, from a personal perspective and then a business perspective, there may be times when, you get rejected initially to start your credit journey. Don't get disheartened by that. Find out what the reasons are for the rejection. It could be a low income, too much high expenses. They think that your expenses, you won't be able to cover the cost of the debt, et cetera, et cetera. And this is where what we want to promote from the financial health perspective and the financial wellness perspective, actually understand where you are, why you're rejected, why you're accepted, and then put into action steps that you as an individual or as a business owner can take to improve on that.
Mm-hmm. Yeah, Paul, great advice. And I think there's a lot of young people out there, which is the future of our nation and the global economy, who need to know this. And we know, and off air, most don't know this. And that's why this kind of education is so critical. Paul, is my credit score the same regardless of which credit bureau I obtain it from?
No, it's not. So this is where the interesting part comes in. So what happens is there is an organization called SACRA, which controls the collection of data from all credit providers, which is submitted through to SACRA. That data is then consolidated and then shared with the registered credit bureaus in South Africa. Each credit bureau has its own algorithm for calculating credit scores based on similar data, but this is where the competitive nature comes in. And they all reflect their scores at different levels. So an Experian score, which from great is like in excess of, you check here, 657, it will be different to what the other credit bureaus have as well. So what's very important when you're applying for credit is understand which bureau is submitting data to the credit provider that you're talking to, so that you can understand the band that you fit into. And we as Experian can help you with that, because I always point to the wrong hand, this hand. We've got this newly launched web app. It's called Up. It's called www.up.experian.co.za. And I encourage every single one of you to please register on that. We will have to verify your identity, obviously, because it's sensitive information. But what it does is it gives you an indication of understanding how to improve your financial education, but it gives you your Experian credit score and your credit report, which you can interrogate. And so that's also very helpful, because then you can be informed about what Experian sees you at, and then understand the nuances with what other credit providers were looking at if they have a look at another bureau's score. But the principles are the same. You manage your debt well, you manage your life well, and you go from that side. So again, I'd like to encourage you all to have a look at that and build on the back end of that.
Great, Paul. As you can see, all to our attendees, it's at the bottom of your screen. It's rotating there. So pop on there. And I use it. It's amazing. It's simple. It's nice. It's informative. And it's meaningful. And it's quick and easy, which we spoke about, Paul. And I think that's what we want. But it's really an important app to have at your side all the time, because it's also going to teach you what you need to do, what Paul's discussing this morning. Now, Paul, can you explain some of the factors that affect or influence one's credit score?
Yeah, absolutely. Again, I think if we just start off with, there's some core basic components for both a personal and a business credit score. Number one is making sure that your core contact information is accurate. So when you go onto app and you download your credit report, you might find, for example, that there are phone numbers there from 1922. Well, that's an exaggeration, 1992. And so if you can consolidate your core contact information that has a positive factor influencing your credit score. Other things obviously are how well you've paid your accounts. What is the total amount of debt that you have outstanding? The number of accounts that you've got also impacts that. Then the high usage of available revolving credits. So that's like a credit card, for example. If you're using a credit card to the limit, then that reflects poorly on your credit score. If you're using it like at 30% of its facility, then it's a better impact there as well. So how you're using your revolving credit, as I call it, is an important factor. If you've missed payments historically, that has an adverse effect. Also, the age of your accounts. You don't have to have a whole bunch of new accounts a starting point, because that also needs to prove that you can pay off those accounts at once. So that's also a factor to take consideration. Obviously, court orders, administration orders, and judgments against you have an adverse impact on your credit score. And then if you're in debt review as well, that's also reflected in your score. And then another interesting one, which a lot of people don't really understand, is that if you apply for credit and you have multiple inquiries on credit, in let's say like 10 in a space of 2 weeks, that also has a negative impact, because that sort of indicates that you're trying everywhere over the place. So again, the message I want to make sure that you all understand is get access to your credit score through app, get access to your credit report through app, understand what's on that, take steps to improve it so that you can improve your credit score over a period of time. And I think that's the core component that we look at. So those are the factors. The same for business. Is your data information correct? Are you paying your suppliers well? If you're borrowing money from a bank or someone like that, are you paying them on time? Are you ensuring that you're utilizing your facilities correctly? Those are all the different factors that impact your credit score. The better that you are at managing your own credit score, the better you are going to be financially healthy. And I want to reiterate this point, and I've said it a million times, and I'll say it another million times more. Your credit score as a person and as a business is your responsibility, and it's your reputation. It is measured and recorded by bureaus and used by credit providers to make informed decisions. But at the end of the day, the accuracy of your credit report rests with you, and you should really take it up and engage that. I know a lot of people sometimes feel embarrassed or ashamed if they have a low credit score. That's okay. Today's the day when you can take the first step around understanding what your particular credit score says, and take the second step about actually going out and improving it. Putting it into action today is the most important message that I can highlight. Understanding where you are, what your position is crucial. Understanding the factors that will impact that, and that's what Up also provides, is educational content around how to improve your score, how to budget, how to save, how to put things into action. Take that information and learn from it, and improve your own financial health, which is great. That's what we want to do.
Yeah, and Paul, we know we've discussed this over time, but we try and encourage. We get thousands of business owners who are also consumers, of course, who contact us. They need their credit score today, their report today, because they're going to borrow money tomorrow or apply for a credit card tomorrow or a retail outlet. And let's not wait for that. Do you agree with that? Let's not wait for it. Let's make that happen now. Get everything prepared now. So when you do need to apply for credit, everything's in place, because nothing is going to change in 2 or 3 days. It's like you just said, the change will come over time, but action it today. And another thing's coming through in my WhatsApp here is the question of what happens if I look at my personal credit report or my business credit report and I don't agree what's on there? Can I contact someone to action that change if I don't agree with what's on there?
Mike, that is probably the best observation that your WhatsApp's going to have this morning. Absolutely. Because remember, what's happened in the credit report is reliant on what credit providers have submitted through, what you have provided to credit providers on previous applications, etc. And you rely on other parties, third parties, to update information to submit, and then the bureaus use that submitted data to build the scores. There are many times that information can be incorrect. So your responsibility is to find out what that is, to query it first of all, and then when you do know that, is to contact the credit bureau directly. So on Up, there's a contact phone number, there's an email address that you can contact Experian support and query the information on your credit reports. Sometimes judgments are cleared, but then the courts don't submit it. So if you have the papers, you can submit it to the bureau. The bureau will then make sure that the judgment is cleared because you sent all the documentation through, and then that should be taken off your bureau report, which then automatically will improve that. If, for example, you settled a credit card in full, or you paid off your car in full, and it's still showing, then there are times when, it might take a month or two to reflect on your credit bureau. But if it's still there and you have a query, again, contact Experian directly. We'll notify what the exact email addresses are and phone numbers are, and talk to our staff, our team. We've got an incredible support team, call center, that can help you through anything and help, number one, understand it, and number two, help you clear where necessary. But again, I'll re-emphasize the message, Mike. This isn't the Bureau's responsibility to check the information. It's your responsibility to download your credit report, because it's for free for consumers for life through app, and interrogate that. Yeah. And go through the journey of making sure.
Yeah, and interesting you say that. I think it was a year ago when we went into this series, and I had this discussion with you. Straight after that, I got my credit report, and I looked at my contact information there. There were 2 phone numbers there that weren't mine. There were 3 email addresses there that weren't mine. And your team was so amazing. They actioned it, and it was removed extremely quickly. And that was the first time in my life I realized that I could do something about it, and I never thought that I could. And what I love about the whole thing is that, and to all the attendees that's coming on the right side there, the web address of up.experian.co.za, please go to that. And the team is there because they want to take off the things that shouldn't be there. And I think that's the perception we're trying to create, is to actually do these things. So thank you for that, Paul. It's so important. Now, just
just emphasize something, Mark, on that one. I mean, this is a journey. I mean, it's like your physical fitness as well. If you want to get fit, you want to run comrades, which some people did this weekend, which is mad. You don't just rock up in Durban on Friday and run on a Sunday. It just doesn't work like that. It's a journey that you're to go through. And just same like your financial well-being, your financial fitness, you have to train and go through the journey and put the hard work in now to clear that up. But you need to understand what that hard work is. And the way to do that is to actually know what your credit report tells you about you.
And make it a habit. Have a message popping up in your phone once a month. Check your credit report, and make it a habit, and make it a fun exercise, because it's so important. Like you say, like your physical well-being, your mental well-being, and your financial well-being. Make it a habit, and it becomes second nature. No, I know.
Also on app, Mark, I just want to so also on app, we've also built in a budgeting facility. And that budgeting facility also brings a discipline into making sure that you understand what you're spending your money on a monthly basis. We've also nicely built in an automatic link with your consent to pre-populate your budget with your credit commitments, for your financial commitments. So you can see what you actually need to pay on a monthly basis, which is also an incredible, insightful thing, because people forget, 1,000 Rand for this and 500 Rand for that and 750 Rand for that. Before you know it, it's 3,250 Rand, and you haven't calculated it in your head properly. But when you see it on your budget, you say, whoa, that is quite a big number. And how can you put things into action to settle it earlier, pay more discipline, all those things. You're right, it's a habit. And you've got to, as an individual and as a business, go on a monthly basis and update that stuff, which is critical. Absolutely critical.
Yeah, absolutely. And Paul, just the next question is, a little bit of repetition, but a little bit of combined action. Can you summarize the key actions that can negatively or positively influence your credit score, and why? So I know a little bit of hopping on there, but I just think it's coming through a lot on my WhatsApp, and I think that the little bit of summary would be really great for our attendees out there.
So let me summarize it quickly for you from a business perspective and a personal perspective. Do not make multiple applications for credit in a short space of time, okay? Because that is an indication from a calculation perspective of financial instability and, creating uncertainty. Make sure that you have any judgments or any reviews against you are cleared and taken away. Do not pay financial commitments late. If you owe invoices or if you owe debt, pay them on time, okay? That's a phenomenal behavior. If you don't do those, if you apply for a lot, if you don't clear your judgments, and if you don't pay your debt, then your credit score will be negatively influenced. Positively, make sure that you pay your suppliers on time. Make sure that you pay the banks on time. Share as much information as the credit bureau needs and make sure it's honest. And then, like you said, go onto your bureau score and ensure the information is correct. Because from a business perspective and a consumer perspective, That data is your information, and it's your responsibility to get it right. And we are here to help you understand what that exactly is and put those things in. So be disciplined, be honest, make sure that you can afford things. So if you are applying for credit, make sure that you can afford it, do the calculation side of it. That's also important thing. So that the production of data through the budget process helps you a lot, particularly in these days, with interest rates climbing as much as they have recently. You think, I can afford 2,000 Rand a month, but that 2,000 Rand can become 2,500 Rand very quickly with interest rates increasing. Always think and plan properly, have your information available, and when you do apply, you'll know what you can afford, you'll know what your credit score is telling you, and that should give you a favorable response from a credit provider. No guarantee, again, and if they decline you need to understand why, but be prepared, do the calculations, apply your mind, think about it, be confident in what you're trying to do and go for it. And again, don't fear it, don't be ashamed, just get your stuff in order, understand it well, and then you can go from there.
Yeah, embrace it and action it, 100%. Thank you, Paul. I love the next question. Does paying an account in full automatically improve your score?
No. It's a question we get quite often, and this is one of the factors that lenders will get to have a look at it, because when you calculate a credit score, you look at account history. So if you've account history, most bureaus keep for 2 to 3 years. The National Credit Act says you can retain that for up to 5 years. Okay, but your credit score is calculated on what's happened in the last 2 years. So if you've defaulted on payments and you've missed payments in the last 2 years, those will still be there in your calculation of your credit report. And even if you've settled the debt, you still have to work out the history, if I could put it that way. So again, if that has happened, don't worry about it. It's there, it's reflected, you can't change it. But what you can change is your behavior from today. So start settling the debt. And as you start regular payments, so you'll see incremental improvements in your credit score. So you won't have a massive jump in your credit score overnight because of this historical component, but it's a journey. Good behaviors, good payments, good patterns from now on, we'll be able to go that way as well.
Yeah, no, absolutely, Paul. And a great one. Will having no default information on my credit report automatically mean that I must score low risk?
No, again, it's like we're talking about here. So minimum risk scores are earned over time through good payment behavior, repayment behavior, like we talked about. And then although you've got new sort of data, it'll take time for that credit score to come up. So, even though you've paid everything for 3 to 4 months, it's not a really long-term indicator, and credit scores are built over long-term. So you can build that over a period of time. So don't give up hope. If your score is still, say, average after 3 to 6 months of paying something, pay 7, month 8, month 9, month 10, month 11, month 12, and you'll see that credit score climb up over a period of time. So stick to it. It's a journey. It's a comrade's marathon.
Great, Paul. Coming through again. Maybe I'm tiring you with similar questions here, Paul, but I think you're giving incredible insight this morning. Can you just some extra tips possibly to build a great credit score?
When you apply for credit, make sure that you always are honest in your submission. Because sometimes people ask you how much do you earn, how much do you spend on, and all those things. The important part there is just to be totally honest about that. Budget for credit. We've talked about this already. Make sure that that you can afford what you are applying for in a very good space, and build some buffer into that, build some fat into that, because of what's happening in our economy. We can't predict what's happening in the cost of living, inflation, and interest rates will impact that. So don't say, I can afford 1,000 Rand and apply for 1,000 Rand. Rather apply for 700 or something like that. When you are applying for credit, business and personal, please make sure you understand the terms and conditions from the credit provider. Every single bank, every single credit provider has different guidelines in terms of how they charge, how they pay, what you're paying for, what you're not paying for. Really understand what you are signing up for, please. Your commitments. If you're buying a car, what does a balloon payment at the end of a session mean? Really understand that. Do not, as a guideline, do not make sure your debt repayments exceed anything between 20 to 30% of your monthly expenses. I think that's a very good indicator. Make sure you make all the payments on time. And if there is a letter of demand from a credit provider or something like that, don't ignore it. Please respond to it. Again, it might be embarrassing, but don't ignore it. Respond to that. And if you are struggling, go to the credit providers and humility and say, can we make alternative arrangements to settle my debt? Credit providers are willing to do that as well. And then again, always check your credit report to make sure the information is right. So those are the factors that I think we should really take into consideration around that.
Paul, unfortunately, our time is up, but I want to thank you, Experian. Your insights are amazing and continue to be amazing. To all our attendees out there, it's because of you we can do what we do. So we're truly grateful for your attendance. Just a quick message. This replay will go out. Have a look at it again. Sometimes we miss a few powerful insights that we don't catch online, but please take a look at it, put it into your library, re-look at it, and thank you for joining us. Stay close to us. And Paul, we'll see you soon. There's no doubt. Thank you very much. All the very best.
Mike, thanks so much. And again, to all your members, thank you for your time. I know it's a short call. We can talk for this for hours and days on end. But again, I'd just like to encourage everybody, go and have a look at up.experian.co.za, see your credit report, go through the educational component, learn from it, put these things into action. Contact us if you think there's something that you want to do. We've got a great team out there to help you as well. So once again, thank you so very much. And if there's any other questions, Mike, post this, let me know, and we will answer them with pleasure.
Paul, super grateful. Thank you very much. All the very best.
Thanks, everyone.
Up your game with Experian's free credit information and education app. Up by Experian gives you a credit budgeting and learning experience to help you take control of your financial health. Step up and take control of your finances. With Up's budgeting tool, you can set up your first budget along with tips to help you. Up pulls in your bureau data and keeps a record so you can compare each month's budget as you progress. Improve your credit score to get a thumbs up. Your credit score is the single most important financial score you'll ever get. On Up, it takes less than a minute to get your credit score. To better understand and improve your score, we have top tips to help you. Learn to build up your credit report and improve your finances. Enhance your knowledge about your credit, money, and personal information with infographics, articles, podcasts, and videos written by experienced experts. Upscale yourself in a simple and fun way. Managing money and credit can be confusing, but Up is here to help. Brush up your financial understanding by exploring our Gelazar courses for free. Once you've set up your profile, you're in control to manage your profile and preferences as you need. And because security is everything in our digital age, Up uses the latest in security technology to ensure your information is secure. We're upping our game by developing an app to help you better control your credit and money. So, step up and sign up for free to Up by Experian at www.app.experian.co.za. Brought to you by Experian. Experian South Africa Pty Ltd is a registered credit bureau with the National Credit Regulator in terms of the National Credit Act. Registration number NCR CB16.